What's up, everybody? It's your boy C-Zar with C-Zar Gets Crypto. We're going to look at a couple of things today. Actually, we're just really going to look at one thing today. I'm not going to be in the big screen for too long. We're going to talk about the RSI, the Relative Strength Index. We're going to talk about a tool that I use and that many traders use. I keep saying it's a tool that a lot of people use to identify certain metrics in the market. I'm going to shrink myself down here. Let's see. So right now I don't have it pulled up, but I'm going to use the shorter term RSI because this is something that's more relevant. Whenever you start TradingView up, if you're using TradingView, the RSI is actually set to 14. That's the default setting. I've found more relevance at the 10. If you find more relevance at 15 or 16 or 20, whatever, cool, go for it. We're not really gonna focus on that too much. We're just gonna kind of focus on shorter term RSIs and what the reads mean. Let's see here. I'm gonna delete the longer term RSI that I have set up here, and for the beginning of this, I just want to look at the RSI. Okay. So, and maybe honestly, I'll make a quick comparison with the price. You can see that the RSI here, it follows price action pretty symmetrically to a certain degree, right? But the RSI only goes from a scale of 0 to 100. It can't be higher than 100. I know that there's numbers higher than 100 here, but it can't go higher than 100, and it can't go lower than 0. Just like there's negative numbers here, it can't go lower than that. So whereas price can go up as high as it wants, and I mean technically it can go as low as it wants too. Yes, it can hit 0, but it could hit 0.0001, 0.00001. I mean, technically price can go as high or as low as it wants to, where the RSI is kept between a very fine set of parameters. So you can see here, yes, we got this like little cup in the RSI right here, just as we have this little cup in the price action, right? But if you look at it as it's going down, this is kind of a straight line down, whereas the RSI, it's not so straight, it's very choppy, and this measures from a closing basis. If you don't know how to identify candlesticks pattern, basically with Japanese candlesticks, that's what this is. That's what kind of chart this is. From the opening point of a green candle, you have the bottom. The closing point is at the top. The wicks are just where it went in between open and close. It's the opposite for red candles. It's very simple. Open is at the top, bottom is at the close. Close is at the bottom. That makes sense because if you open and you go down, you're going to get a red candle. If you open and you close up, you're going to get a green candle. And these wicks, the little wicks, that's why they call them candlesticks, because you get candle wicks. That's what happens in between the open and the closing. So here, we closed green, but we went potentially, I mean, we don't really know this, but we went all the way up here and then we came back down and closed there. That's probably likely what happened. Though to be fair, it could have opened, gone all the way up here, could have came all the way down here and wicked, and then come all, like, you really don't know. But I mean, it's a safe assumption that we probably formed this this lower wick here around the time of open, and then we shot all the way up here and then came down to close. It's a pretty safe assumption that that's what happened. If you want to find out what happened more so, you can click on the weekly, the daily, the blah blah blah. I'm actually glad that I started with this because I don't want to do the monthly RSI. I would like to do the daily. Okay, so we're looking at the RSI now, just the RSI. I'm going to put this in, the top here is at 100. Let's see if we can get the bottom there at 0, basically. There we go. So from 100 to 0, you're never going to see anything outside those parameters. So this little highlighted purple zone, there's a name for it. I can't think. Let's see if it actually tells me. Let's see. It just calls it the background. The lower and middle band. There we go. Lower, middle, upper bands. This is your band, your RSI band. It marks when you're oversold and overbought. So whenever you're oversold, the RSI is in this black zone. It's on the lower parameters of this band. Whenever it's overbought, you're in the upper parameters of this band. You can see over here, RSI was overbought. And if we look, here we are overbought. We look at the price. Well, that was kind of a topping point, and then we came down. If we look at this oversold zone here we are, and we didn't really bottom there. We did keep going lower, but we at least stopped going lower for the immediate time frame. You don't tend to, it's not guaranteed, but But normally, you don't stay in the oversold or overbought territories for long. If you do, it's kind of scary. Well, we'll just see. But anyways, using the RSI is a very helpful tool because it allows traders, it allows people who are looking to invest even, to kind of come to a better decision as to when they should buy or when they should sell. There's a bunch of ways that you can do this, and I mean, obviously, it can be as simple as buying in oversold territories, selling in overbought territories. But again, as we just saw, just because you're oversold doesn't mean that you're at the bottom. You can go lower. It just might stall out. The readings might get stronger, and then we go down, and then same thing, and then we go down. And that tends to happen in bear markets. A good way to tell if you're in a downtrend or an uptrend is by using this 50 line, the middle line here at the 50. It's actually a very significant level. You can see we had a significant bounce here. We kind of rejected this area here. Sure, we showed some disrespect here. It's not always going to be respected, but you can find significant moves off of this level if it respects it. And generally speaking, if you look at all these little time frames, you can see here we kind of were above the 50 for most of the time. I bet we saw some bullish price action, above the 50 for most of the time. Okay, cool, we saw some bullish price action. Here we're below the 50, bearish price action. In fact, we've been held down by this 50 for a long time, and until we really got above it here, we basically kept going down. And yes, this was a weak rally up, but this was the first time we showed stronger inclinations in the RSI. And that was actually the first time since we've been held down by the 50 that we got any kind of bullish movement, really, instead of just sideways wigwags, But to be fair, that was the longest that we stayed in the bullish areas. We couldn't even get overbought. If you fail to break this overbought zone, that tends to mean that price is weak, price action is weak, and that's what this is all about. It's about measuring the strength. The RSI literally stands for Relative Strength Index. So 10, I've got it set to the 10, so it's relative to the past 10 candles, and it's measuring the strength in comparison to those. Something like it takes 10 candles to form. It's not necessarily like that because this stuff over here, if you're measuring down here, the read comes in from the past 10 candles, but you can kind of assume what's going on even more than 10. I don't know how to phrase this. You can use more than 10 candles worth of data to kind of assume where you're going, and that's what I'm saying by addressing these ranges here. Starting all the way over here, that's February 9th of 2022. Over here is March 29th of 2022. Coincidentally, it's a month apart. But you can tell that because while you did dip below this 50 level, you rejected the oversold zone. That's a good thing, and you stayed above the 50 zone for most of this kind of area, which means, if we look at it, again, that was a good thing for price. Sure, it's been in a downtrend, but really, once it kind of got above here, this was kind of the beginning of a little relief rally. And yes, it wigwagged a lot, but ultimately, if you bought at this first sign of breaking the 50, which isn't always a good idea, but if you did, you could have bought at 41,000 and you could have sold around 46,000. You would have made over 10% gains, if you played it right, whatever. You could have, whenever we got this, there's a thing called bearish divergence. Just a little side note here. You can see how the RSI here has a high and then a lower high, while the price here on a closing basis, remember the closing of the candles is important. That's what this RSI is based off of. The closing basis, the highest close we had was here, and that's where the highest RSI was. And then we come down, it's a lower read on the RSI, but a higher read on the closing basis. That's called bearish divergence. So you could have used the RSI to tell you, maybe we're going to go down again. You could have sold, maybe bought down here, and then waited until we got into the overbought zone again, seen that we were holding above the 50. We even bounced off it here and known that, okay, there's more room to go. Basically, it's kind of like, I don't know, it can be as detailed or as simple as you want it to be, but the more detailed you are with it, the better, the more accuracy you're going to see. And it's more than just looking at the relevant stuff. You have to look at it. It's like a story. You got to look at where it's come, where it's going. And just like price action has trends, RSI can have trends. You can draw a line here where we can see, held down by these tops, it's coming down, it's sloping down, and we've kind of got this downward sloping channel-ish. Maybe it's more of a wedge. Maybe it's more of a wedge. It's kind of a channel. It's nearly parallel. You know, I'm not drawing it super accurately, but whatever. I mean, it's close enough, you know. And you can tell while we're in this range, it's tightening and winding down. I would bet if I put a line here, like basically at the beginning of this range, probably like here to the end of this range where we broke out, I bet we're going down. And then as soon as maybe we didn't find the bottom right here, maybe the bottom was somewhere over here, but I bet this was the lowering range. And if we go to price, you can see it. Well, I guess it's not completely true. We did stall out. We did go low. You know, we kind of hung out in the same range, but the RSI, even though it started to form this down here, you probably wouldn't have identified it over here. You would have only identified this bearish divergence. Again, remember, lower highs with higher highs. You would have identified it here. And if you sold here at the first notice of that bearish divergence, that's at $56,000. Sure, Bitcoin went all the way up to $65,000. You wouldn't have caught the exact top, but you would have been put in a position where you could have bought down in this range where it hung out around $30,000 to $35,000. You could have bought $10,000 or more lower for a solid, I mean, from May to July for a solid like 2 months. You could have had an opportunity there. And that's what this RSI is about. And then the main point that I was trying to really deliver with this range is once we broke out of it, you can see bullish price action resumed again. This is a bearish trend of the RSI. Sure, we kind of were going up still, but these lower highs, these lower lows, they should have been a warning to people up here that, we might be topping out, you know? And a lot of people did call the top over here. A lot of people didn't call the top over here. There's inclinations there that show it too. But to be fair, there were a lot of warning signs. And whenever you keep climbing like this in the price while the RSI is going down like this, it just means we're going to see some devastating price action, which, I mean, may be devastating to some people, maybe not to others. It is Bitcoin after all. A 55% drop really ain't shit in the crypto space. If it is to you, maybe choose a different market. It can happen, and it will happen to anybody involved, unless you're really good about it. You know, you can be good about it, but it's hard. It's really hard, especially with the whole hodl mentality. A lot of people want to just hold and never sell, and that's okay. If that's your strategy, that's okay. Every billionaire that's become a billionaire from buying Bitcoin, they'll all tell you the same thing. If they never pressed the sell button, they would have more Bitcoins. So, you know, take it for what it's worth. But at the same time, if they press the sell button up here, if they just press it right, which is easier said than done, they would be able to buy more Bitcoins down here. But again, greed gets in the way, emotions get in the way. I certainly fall prey to that. The main point that I was trying to show is that once we started this formation, bearish things were inbound. It doesn't have to start immediately. Sure, we got a couple of little drops and dips here, but what was really telling was our peaks were getting closer to each other. You can see that this peak here to this peak, it's pretty separated, but we have our first bit of bearish divergence. Here we've got our next peak. It's not as far separated. This rally was up, but you can even see if we draw a line here from the bottom to the top, whatever, you can see the slope of that line is at a more steep angle than the slope of this line. You can see it. You can literally see it. And then the slope of this line here, I'll even draw, I don't know, I'll draw an info line. The slope of this line is even at a lesser angle. If we were to draw info lines on these, they kind of help tell you the angles. Yeah, you know, 63 degrees here, whereas this one, I'll delete it, this one's at 31 degrees. When you see stuff like that, whenever you see tapering off like that, paired with the RSI sloping down while price is going up, that's a bearish inclination. And if you caught that, if you saw that early, even if you didn't catch the exact top, you could have sold around here. I mean, there were plenty of opportunities to sell. We got our first bit of bearish divergence really at, I mean, I guess technically we got it really right here at 47,000. So that wouldn't have even been close to the top. I mean, close enough, whatever. But point being, there was bearish stuff that was happening, and if you sold there, you still would have been in a good position to buy. But again, further illustrating the point that just because you see bearish things immediately doesn't mean that it has to drop immediately. It's kind of like a warning sign. It can be immediate, it can be too, and that's where the difficulty lies, you know. But if we just came off of a way to kind of get yourself out of the fear of an immediate bearish action happening to prevent you from selling right here is if we've been up here for a long time, yes, there's some bearish stuff going on right here, but we still haven't had a lot of time. You can see in the RSI below the 50. We haven't. We didn't really start having a lot of time. I mean, we started getting a little bit lower here, but we didn't really start having a lot of time below the 50 until April, till 17th of April, which was quite literally the top. So if you just waited until we had a move down here, I mean, you might have sold again around 50,000, or you could have sold around 62,000, somewhere in there. But if you waited, you got more bearish divergences conforming. You see these lower divergences and peaks are forming as well. It might give you more reason to sell or more comfort in selling. You can sell at the first sign of dismay, you can, but you might, and you're very likely to, miss further price action going up. On the contrary to that, you might see the dismay here. You might see this bearish divergence. And you're like, should I sell? And you don't sell. It dumps. You could panic and then sell here, and then it goes up again, and you're put in a weird position where you don't know if you should buy or sell, or buy more or wait. And if you were waiting from March, you'd be waiting basically all the way until May. You'd be waiting 2 months to buy again. And most people don't have that kind of patience, especially whenever they're emotional and proven wrong on a decision that they made. Anyways, enough of that. Just kind of I really want to talk about the RSI. So key points, again, being above the 50 is a good thing. I'm going to delete all these lines. Being above the 50 is a good thing. You want to be above the 50. You don't want to be, if you go below the 50, that's okay. To confirm that you're still in a bullish trend, you want to see things like this. You want to see, if you're to go below the 50, that it's not for long, and that if you were to go to the oversold zone, you bounce right off it. That's beautiful. That means, okay, we're not even close to being done yet. We don't even have, all these bearish divergences that could have formed. They're invalid now. We're just continuing the trend. And here there was a little bit of bearish divergence, but then this stuff kind of deconfirmed it, where here we're getting some more. You can see these lower highs. That's very telling of the things to come. Just like what we're in now, you can see that how we were all above this 50 level for a while. Here, we're not really above. Here's like the most that we've been above the 50 level since November of 2021, which is when we topped. We've been at large on average below this 50 level, and you can see it, like most of the RSI is below this 50 level. And yes, it came above it for a little bit here. Those are your relief rallies here. But it's kind of nice that we got into the overbought zone. You like to see strong moves have strong readings. That just kind of confirms things. But whenever you go straight up and then you just come straight down, if you're in a bearish trend, that's not necessarily promising either. And then we get lower lows and lower lows. That's just confirming if the RSI is in a bearish trend, the price action might be in a bearish trend. And when we are hanging out in these, you can tell that we are in the oversold zones more than we are in the overbought zones. And then we come up and reject the overbought zone, not once, but twice. That's also bad. That's also not good. That just kind of further confirms that we're in a bearish trend. And, lower price action might be coming. We have a kind of tightening range right now. I'm gonna sidetrack a little bit. We do have kind of a tightening range right now. Higher lows and lower highs on the RSI. We are definitely contracting. We are ready for a move. It could be to the upside. It could be to the downside. I would feel more confident in saying that this move would be to the upside if we weren't already in a bearish trend, if we didn't already reject the overbought zone twice, if we weren't being held below this 50 level for most of the price action. I would feel more confident in saying that we were going up. We could go up, even with all those things going on. This isn't a prophecy. This isn't a sign. I mean, it's a science, I guess. I don't know. This isn't like a direct prediction. It is a prediction. It's not a direct forecast. I don't know what words to use, guys. Because it's a forecast, it's a prediction, but it's not a prophecy. It's not something that's destined to happen. It can happen that we go down. And in my opinion, statistically speaking, and from what the charts are saying, we're more likely to go down. But we could also go up. Anything could happen. Nothing's guaranteed. And if you think that it is, you should check yourself, basically. But to me, I think things look like we're going to go down. There's more reads than just, here, I'm going to kind of expand this a little bit. There's more reads than just the 50, just the 70 and the 30. The 70 and the 30, that's where the bands are. You get overbought when you're above the 70. You get oversold when you're below the 30. I didn't really explain that earlier. It should be obvious, but just to explain it. There's other levels besides that in the 50. And what those levels are areas called the bearish control zone and the bullish control zone. And the bearish control zone for the RSI, is at the 40. At the 40 right there. The bullish control zone is at the 60. So you could think of it like anything in between this, it's kind of like neutral price action. It's kind of like unknown, right? And yes, we got up here, but you can tell we didn't stay in the bullish control zone for very long. Yes, we got above the 50 for a little bit, but we didn't stay. That means that the bulls are not in control. The bears are likely still in control, and they're fighting. And bulls and bears, whatever, the people trying to push the price down, or the people who are scared and selling, whatever's causing the price to go down, they're more dominant than the bulls are, because the bulls can't even stay in their control territory for a long time. And just to like further add on to this point, the bullish control zone is here. It's from 60 to 100. Bearish control zone is here from 40 to 0. It's like that's the control zones. And I mean, when you see things like this, whenever you see things like bouncing off the bearish control zone, that's reason for hope. That's not a bad thing. Being held down by the 50 to me is a little bit more significant, but we are kind of winding in this range. That's a little bit of hope as to why we could pop to the upside. If we go back in time here, you can see here we bounced off of this bullish control zone. I just wonder what the price was doing. We did it right there on Sunday, October, whatever. Bounced off it, and then boom, got a nice pop up. And yes, we continued to move up after that, but that big day that we popped up 7% for Bitcoin instead of like 2% or 3%, that happened after bouncing on this bullish control zone right here. I guess not directly after, but it did come after it, and we got into the oversold. Anyways, I'm gonna delete all these lines, at least those lines, those 2 lines. Oh man, that's great. There's other things that can kind of help confer the RSI, but the key things, the key elements that I wanted to talk about are the 50 level. The 50 is a level that should be respected. Even if it looks like it's being disrespected, use it as a metric. Okay, we're wigwagging through it, but what's price doing mainly? Is it mainly below, or is it mainly above? Because, or not price, the RSI. Because if it's mainly above, if you're showing stuff above the 50, that means you're showing strength in price, which is a good thing if you want price to grow. If you're showing things below the 50, you're showing weakness in price. And in fact, if you're showing things below the 40, you're showing weak control over the price in a weak manner. You're going to see weaker moves below the 40. You're going to see stronger moves above the 60. And don't get me wrong, you can see, like, let's just see. Let's go back in time. Down here, we're in oversold conditions, and we got a nice bounce all the way from 3,900 all the way up. I mean, in a very short time frame, up to $7,000. You basically like 40 or 60% gained your money. I don't know what the math would be on that. Let's just do it so that I can find out. Let's see. 65% gained your money. Oh, that wasn't right, was it? It wasn't 65. 81%. I wasn't even close. So 81% gained your money in a very short time. And here, you actually rejected the 50. You didn't even get above it. You can have bullish price actions happen down here, and in fact, most of your bottoming patterns, or most of the bottoming prices, are going to come in at the weakest points in the RSI. Not always, but most of the time, especially on shorter time frame RSIs. But just because it's in the oversold zone doesn't mean it's the best time to buy. If you bought, we're just going to go through and put lines on it. Babe, will you get her? Wait, what? Will you get her? Oversold right here. If you bought here, well, guess what? It went lower. If you bought here, whenever it was oversold again, well, guess what? It went lower. And even here on the oversold, if you bought there, sure, it went up a little bit. You might be feeling confident, but it went lower. It's really hard. It's not the easiest thing to find the bottoms, but you can use, especially as a trader, this is where this kind of tool comes really helpful, is it can tell you when it's a relatively good time to buy, so that you can have a relatively good time to sell, and then set yourself up for another time. And let me see what else we got here. Let's see. So like this low point here, the low of the last bear cycle, which was at 31 something. If we look at it, the low, not that the lows are ever easy to identify. In hindsight is 2020 for sure, but you can see it here. You've got a low in the RSI, higher lows in the RSI right there. Oops, didn't mean to do that. and then what you've got here is a low on a closing basis of the candles, and it just keeps going lower. It keeps going lower. Now, some people might say if you're coming out of this trend line like this, that's an invalidation. Okay, well, whatever. We can, oops. I forget that I have my permanent drawn on there. Let's see. Okay, so if you want, if that bothers people, then you can just do this. And it still works. It still works. You're still getting, and even then, from here to here, there's bullish divergence. And we got a little pop. And that little pop is all that was really needed to satisfy this bullish divergence. It came up here, got this pop, but then it came lower. That confirmed that the bullish divergence was there, but who knows how long it's going to play out for. And the fact that if we look at the RSI during that time, it couldn't even get above the 40. It stayed in bearish control before it turned back down again. That should tell you, okay, maybe there's one last move down, and there was one last move down. And again, hindsight's 2020. I might sound smart saying this, but like I did not buy the bottom. I could have, man. I could have bought the bottom, and I didn't. I did not, because to be fair, I was more an inexperienced trader back then. But you've got clear divergence here, and I mean, it literally marked the bottom. If you bought with this clear divergence, you could have bought below 4,000, and you would have been set up even with this 70 whatever percent drop that Bitcoin's in right now. This, I think it's like a 76% drop. You'd be set up with gains, 4,000 to nearly $20,000. I mean, that's a 5x. You'd buy below 4,000, you would have still been holding it now. You could have not played the game at all, and you'd still have a 5x in your price after all this turmoil. So the RSI can really set you up for success if you use it properly. And again, I just want to kind of show you, like zooming everything out, look at how much time we spent in this overbought territory. Overbought, again, does not mean it's a good time to sell. It can mean, and ideally you want to sell in overbought conditions. But when it's overbought, when the RSI is overbought, people get this misconception that, oh, I got to sell now. No. The strongest moves happen when the RSI is showing the strongest reads. That makes sense, right? The relative strength index. You're going to get the relatively strongest moves when your relative strength index is at its strongest. Just like you're going to get the relatively weakest moves whenever it's at its weakest. And yes, it's a good time to buy when things are weak. Yes, it's a good time to sell when things are strong. But you feel kind of dumb if you get in a little too early, or even if you get in too late, for a trade. If you're investing, buy every time that it goes oversold. I'm sure you'll do fine in the future, and just never sell, whatever. I don't know. This isn't financial advice. But again, if we sold at the first look of oversold territory here, well, you would have, if you bought at the first signs of oversold territory, you would have bought up here at 50,000. If you went ham on that, well, guess what? You are less than you have more than a 50% drop right now, and that would suck, And you got to pay attention to it. Did it get oversold and then kind of come up to this 50 area? It couldn't even get into the bullish control zone, and it came back down. That should tell you further things are coming along. Could it even sustain prices that long above the 50? Kind of here, but not in the bullish control zone. That should be a warning. If you can't sustain prices above the 60, that should be a warning. And even, let's even take this as an example. One last thing I want to talk about. Here, right here, the RSI was bouncing directly off the 60, twice even. That probably psyched a lot of people out. That had them thinking, okay, we're going to go higher. The one thing that might have helped, let's see if we have it. We don't have any bullish or bearish divergence. So this one, that could have been a good psych out rally, honestly. Kind of, if you're bouncing off the 60 here, some people could have gotten psyched out. But ultimately, I mean, there's other things that you can use besides the RSI. Like, let's just see. I don't know. That's not really a relative area. I don't know. That could have psyched a lot of people out. We got above this 1, 2, 3 MA. I bet a lot of people got psyched out on this rally and thought we were going higher. I probably did. I don't remember, honestly. I know that I didn't call the top necessarily, but I did have a scenario laid out to where this was the top. I didn't think it was the top. I thought it was a topping point. I definitely didn't think it would send us even down here, especially not down here. But I mean, I didn't make YouTube videos back then, so I got no proof to say that. I definitely didn't call the top, guys. That's not what I'm trying to say. I knew that we were in trouble because of this bearish divergence, this noticeable bearish divergence here, and this little like 2-peak pattern. It's a classic thing that happens. But here, we kind of rejected the 50. This is where the fib tool could come in handy. I know I'm talking about a different tool now, but the Fibonacci tool, if you're resisting the 50, if you can't get above that, I've said it before in other videos of mine, it's not a level that's normally respected, but when it does get respect, it gets significant price moves. Holding this as resistance is not a good thing. So using the fib could have been the only way to really tell you that, maybe we are going lower. We can't get above the 50. It's not a good thing. You wouldn't know that from just looking at the RSI. And this is where it falls upon us as traders, as investors, to do more than just the bare minimum in our research, And some people, and don't get me wrong, it's good to keep things simple. It's not good to overcomplicate things, but the details, you got to pay attention to the details. And that's where the RSI can really help you, is if you pay attention to the details. And don't get overthrown by the readings. Don't start getting in your head about the readings. Don't think, oh, it's overbought. It's in the overbought conditions. I need to sell now. No, you're probably going to miss the top. And in fact, if we go back, I've said this in other videos actually. Just this will be the last thing that I talk about. If you notice, every single time that we get into overbought or oversold territories, that's normally a sign that we're going to continue growth, at least for a short amount of time. We're getting near the top. Or the bottom, but we continue to grow, just like over here. We first, and it's the first time since August all the way up until October of 2020, August, September, October, first time in 2 months that we get into the overbought territories. If you sold right here, you would have missed this whole run up. And look at how long. I mean, the fact that we bounced off of this overbought territory like this, the fact that we use that as a support level for the RSI, that's significant. That's a good thing. That's like the best thing for price action. Just like if we were holding the oversold territory as resistance, that's not good. That is not good necessarily, not always, And that's what here, you got some bullish divergence, sure, but ultimately you went grinding lower. And then finally you found support on the oversold territory twice, 2 times confirming. You got a double bottom on the RSI. That's a good thing. But again, if you sold at the first sign of getting overbought, you would have missed this whole run up. Be patient. This should tell you, okay, maybe we're getting close to a top, or maybe things are just getting started. And a key way to tell if we're just getting started is if we hold that bullish control zone. It's nice that we hold the oversold zone here at 70, but if we even came down to the 60 level and we bounced off it, that's signs that, okay, the bulls are still in control. And we didn't. We stayed very bullish here, and even then, we came down, we bounced off the 50. Maybe it's a little bit of I'm sure a lot of people got worried here whenever we dumped from 19,000 all the way down to 15,000, 16,000. I'm sure a lot of people got worried, but the RSI was telling us, don't be worried, don't be scared. We're holding the 50. We even went a little bit below it, but we held the 50. And another thing too, there's I know I talked about bullish divergence and bearish divergence, but whenever you have a low point here and a higher low here, and you have a low here and a lower low, this is called hidden bullish divergence. Bullish divergence, classically, right, is when you have higher lows in the RSI but lower lows in the price reads, like this, higher lows but lower lows. That's classic bullish divergence. Hidden bullish divergence is where instead of having lower lows on the price reads and higher lows on the index, is whenever you have higher lows on the price readings and lower lows on the index. That's called hidden bullish divergence. Couple that with the fact that we've been bouncing off the 50, we've been maintaining bullish control zones and strong price indications. This should have been fairly obvious that we weren't done going up yet. And again, hindsight's 2020. I can sound real smart looking back. I definitely bought around 19,000 and I held all the way through, and I held all the way through and I held all the way through. You know what I mean? That's why selling is very important too. Buying and holding isn't always the most important part. But for a long-term investor, you probably do just want to buy and hold. But the main point of this is for traders, for anyone who wants to be a trader, maybe hopefully to understand the RSI better. And then even investors, if you want to look for a good time to buy, ideally, you probably don't want to buy in overbought territories. But if you use this tool and see, we're getting strong reads and we're not really getting any weak reads, it might tell you, okay, maybe I should buy this rally. Maybe even though I missed, from 10,000 to 19,000, maybe I should buy this rally. That's what I did. I remember doing it. I literally, I waited. I was in denial that I thought we were going to come back down, but we didn't. And I literally bought around 19,000. We're at the top here, and I'm glad I did because I caught all that. I didn't sell it. I feel bad about not selling it, but to be fair, I think like most people in the crypto space, we thought we were at least going to break 100K. Just never happened. Hindsight's 2020, y'all. Anyways, that's the main things I want to show. That's just the main things I wanted to show. And just like there's hidden bullish divergence, there can be hidden bearish divergence. when you get higher reads in the RSI than you had before, but the price is lower, that's not a good thing. If you're showing more strength here, but your prices are lower, that's not a good thing. Normally, not everything's guaranteed, but normally that's not a good thing. Anyways, I hope I wasn't too confusing. I hope that I made a little bit of sense in this. I think if you want to keep the RSI simple, if you want to keep the readings simple, really just look at it from like a zoomed out perspective and see, are we chilling more below the 50? Like, what's the RSI doing? Is it hanging out more below the 50? If it is, probably not good. Is it hanging out more above the 50? If it is, and you see all these like kind of gaps down here where there's not a whole lot of price action or RSI action, especially if we're bouncing off this oversold zone or the 50 zone, if you're getting those things, that's a good thing. That means that the bull trend is probably still happening. And it comes to an end normally when we get these extreme forms of divergence. And just because we get it at first glance doesn't mean it's going to happen at first glance. It can, but it doesn't mean it's going to. A lot of times, actually, this divergence does get played out over months. And then same thing down here. You know, we got some bullish divergence down here instead of bearish divergence. Sorry, I meant bearish divergence, not bullish divergence. We got bullish divergence down here, but that doesn't mean it's time to buy necessarily. It could mean it's time to buy. And I bet if you bought now below 20,000, you're not going to kick yourself in 5 years whenever Bitcoin's at $20 million. No, I don't know what price it'll be at, but long story short, that's hopefully how you use the RSI. At least that's how I use it. Maybe I can make a video on my long-term RSI. I do like to use the long-term RSI. I don't see really anybody else using it. I click, if I click indicators here on TradingView, I click relative strength index. This is how I do it. I don't like, I know some people like the MA, the moving average for the RSI. I don't like it, so I click it off. I'm going to change my color to orange. It was red before, but I'm going to change it to orange. And then, I don't know what the Bollingers are for. There's no Bollinger Bands. Anyways, input, I'm going to make it 123. That means it takes 123 candles to form it. And you can see here, it's a lot harder. You don't spend any time really in the overbought or oversold zones. In fact, any time that you've been overbought has been ideally a time to sell, like a more ideal time to sell. And the divergences at play here are a lot more significant. On this top here, we were way down on the readings, you know what I mean? And also on that note, for the long-term RSI, breaking the 50 to the upside is a lot more significant. Breaking it to the downside is a lot more significant than this 50 is. And that's, you can see it. I mean, if we put a 50, if we draw the 50 line here, you can see it holds this as respect. It did disrespect it a little bit here, just a little bit, but it did bounce off it right there, did hold it as resistance here, it's held it as resistance again. I find the long-term RSI, especially converging with this long-term MA, the 123 MA, I find it to be very helpful. Maybe I'll make another video about that sometime, but for now, I just wanted to show you the basics on just like the regular old RSI. I use the 10. Some traders use 14 or 15 or 20 or whatever. They don't tell you what they use because they want you to pay them to use it, whatever. I just say, mess around with it. See if you find some significance in it. If it's making your trades better, then it's probably a better tool than the 14. If the 14 is fine for you, keep it at the 14. That's the default setting, whatever. I use the 10 because I find more significance on it personally. I notice more divergences on the 10 than I do on the 14. But that's just me. It doesn't have to be done any one way, but no matter how you use it, if it's a shorter term RSI, pay attention to the 50 level, pay attention to the overbought and oversold levels, pay attention to how long you are staying in those areas, and odds are you will be able to catch the trends and stay in the trends more proficiently. And that's the whole goal for us as investors and as traders. I hope everybody got something out of this video. It went a little longer than I meant for it to. Take care. Have a great day. Make a shit ton of money. Thank you. Oh, and like and subscribe to the video if you're still watching.